Palantir just made a massive bet on this old school telephone company, and it could be the key to the entire AI revolution. The company? Lumen Technologies, ticker LUMN. On the surface, it looks like a mess. $17.7 billion in debt, negative shareholder equity, and years of declining revenue. Most people would call that a ticking time bomb. But that's what makes this story so strange, because instead of bailing out, Lumen's CEO just bought over $500,000 worth of shares, and the CFO is buying too. This isn't your typical growth stock or your safe dividend play. It's a high-stakes turnaround that could either explode or flatline. The stock has already soared over 130% in just 6 months, and now that Palantir is involved, everyone's asking the same question. Is this a comeback or just a trap? So who exactly is Lumen? If the name doesn't ring a bell, you might remember them as Centurylink or Level 3 Communications, once a telecom powerhouse providing landlines and enterprise internet services. But over time, that business began to rot from the inside out. Think of it as an old copper wire empire watching the world switch to fiber and cloud. And the financials reflected that. For years, the stock was in a brutal downtrend. Revenue was falling quarter after quarter. And worse, the company was saddled with an enormous pile of debt, a hangover from the big acquisitions it made in the past, like the merger with Level 3 in 2017. This debt is the villain of our story. It's the ticking clock in the background of every decision the company makes. This is where the transformation begins. In late 2022, a new CEO, Kate Johnson, took the helm. She came from Microsoft, and she brought a completely different mindset. The old strategy was to manage the decline. The new strategy was to find the hidden gem inside this dying business and build the entire future of the company around it. So, what's the hidden gem? It's the network. Not the consumer internet part, but the massive, global, long-haul fiber optic network. Lumen owns one of the largest and most deeply connected fiber backbones on the planet. I want you to think about this like real estate. The internet isn't a cloud, it's a physical thing. It's hundreds of thousands of miles of glass fiber buried underground and laid across ocean floors. Lumen owns the equivalent of the interstate highway system for data. For years, this was just seen as a bunch of dumb pipes. You'd sell access to it, but it wasn't a particularly exciting business. But now, with the explosion of AI, that's changing. AI models, cloud computing, and hyperscalers like Amazon, Google, and Microsoft are creating an unimaginable amount of data traffic. That old interstate highway system for data is suddenly looking like the most valuable real estate on the planet. The dumb pipes are about to get very, very smart. The new management team looked at this situation and made a bold choice. They decided to go all in on the enterprise and wholesale market, serving the biggest companies and data users in the world. And to do that, they needed to simplify, focus, and, most importantly, pay down that crushing debt. This led to a series of massive divestitures. They started selling off the non-essential parts of the business. They sold their Latin American operations. They sold their EMEA business. And the biggest move of all was the recently announced deal to sell a huge chunk of their consumer fiber business to AT&T for $5.75 billion in cash. This is a critical point. They are selling valuable cash-flowing assets, but they're doing it for a reason. It's a controlled liquidation to fund a rebirth. Every dollar from these sales is earmarked for two things: paying down that mountain of debt to give themselves breathing room, and investing directly into modernizing and expanding their core fiber network to meet the demands of the AI era. Internally, they have this framework they call grow, nurture, and harvest. It's how they think about their products. The harvest bucket is the old stuff, the landlines, the TDM services. They're spending $0 to grow this. The only goal is to manage it for cash flow as it slowly disappears. The nurture bucket has more mature but still necessary products like VPNs. They'll defend this business, but it's not the future. The entire story, the entire bet on Lumen comes down to the grow segment. This is where the modern products live: high-speed IP, wavelengths, cloud connectivity, and security services. This is the engine of the new Lumen. And for the first time in a long time, it's working. In the most recent quarter, this growth segment saw revenue increase by over 8.5%. It now makes up nearly half of their enterprise revenue. You see where this is going? The investment thesis is a race against time. Can the growth segment expand fast enough to offset the decline of the harvest and nurture segments? If it can, the company will hit a critical inflection point where total revenue finally stops shrinking and starts to grow again. Management thinks this could happen for EBITDA as early as 2026. If they pull that off, the market will have to completely reevaluate what this company is worth. Now, this is an interesting turnaround story on its own, but it's what happened in October of 2025 that threw gasoline on the fire and made Wall Street truly pay attention. Lumen announced a major, multi-year strategic partnership with Palantir. This is the catalyst. This is the kingmaker. And you have to understand, this is not a simple sales agreement. Lumen isn't just reselling Palantir software. It's much deeper. First, Lumen is using Palantir's AI platforms, Foundry and AIP, to fix its own internal mess. Decades of acquisitions left them with thousands of disparate, clunky back-office systems. They're using Palantir's AI to streamline operations, automate processes, and generate massive cost savings. They're already targeting $350 million in cost reductions for 2025, partly thanks to this. But the external part is even more exciting. They are combining Palantir's AI software with Lumen's network fabric to create a brand new product for enterprise customers. CEO Kate Johnson summed it up perfectly. Palantir frees data while Lumen moves it. Think about it. Companies everywhere are trying to deploy AI, but it's incredibly complex. You have data in your own data center, you have data in AWS, you have data in Google Cloud. It's a mess. The Lumen Palantir offering gives these companies a single, secure, high-performance platform to run their AI applications across this complex multi-cloud environment. This partnership does two crucial things for Lumen. First, it gives them a cutting-edge, differentiated product that their old telecom rivals like AT&T and Verizon can't easily replicate. It moves them up the value chain from just providing the pipes to providing an intelligent, integrated platform. Second, it gives them instant credibility in the AI space. By aligning with a best-in-class leader like Palantir, Lumen's narrative shifts from a speculative, "we want to be an AI enabler," to a validated, "we are an AI enabler" with a top-tier partner and a real product. Reports suggest Lumen is committing to spend over $200 million on Palantir's software, showing just how serious they are about this integration. So, you have the bull case, an irreplaceable fiber asset, a new management team executing a clear turnaround plan, a growth segment that is finally growing, and a transformational partnership with Palantir that validates the entire strategy. It's a compelling story, and it's why insiders are buying. When a CEO with deep industry experience starts writing personal checks for company stock, it's a powerful signal that they believe the plan is working. But now we have to talk about the bear case, and it is formidable. The single biggest risk is, without a doubt, the balance sheet. That $17.7 billion in debt is not a joke. It's an existential threat. And the negative shareholder equity is a massive red flag that indicates serious financial distress. Right now, their operating profit isn't even enough to cover their interest payments. This creates a situation with very little margin for error. Any unexpected economic downturn, any tightening of the credit markets, or any significant misstep in their execution could be catastrophic. The second major risk is the melting ice cube problem. The race against time I mentioned? The bears believe Lumen is going to lose that race. They argue that the decline in the legacy harvest business could accelerate, and the cash flow from those segments could dry up faster than management expects. If that happens, they won't have enough money to both service their debt and make the necessary investments in the growth segment. This would be a death spiral. And finally, there's the intense competition. Lumen isn't operating in a vacuum. AT&T, Verizon, and a host of specialized fiber providers are all targeting the same lucrative enterprise market. These are huge, well-capitalized companies that can afford to be very aggressive on pricing. Lumen has to prove that its network and its Palantir partnership are enough of a competitive moat to win against these giants. This tension between the bull and bear case is perfectly reflected in the company's valuation. If you look at relative metrics like the price-to-sales ratio, Lumen looked incredibly cheap, trading at a significant discount to the industry average. This suggests the market is assigning a very low value to its existing assets and revenue. But if you look at intrinsic valuation models, like a discounted cash flow analysis based on its current trajectory, the stock looks dramatically overvalued. One analyst model cited in the research pegged the intrinsic value at less than $1 per share. So, what gives? This disconnect is the entire debate in a nutshell. The relative valuation says the assets are cheap. The intrinsic valuation says the future cash flows don't justify the price. An investment in Lumen today is a bet that the future will look nothing like the past. You're betting that management can fundamentally change the trajectory of those future cash flows. Your view on the valuation depends entirely on your belief in Kate Johnson and her team's ability to execute this incredibly complex turnaround.